October. Hey, Andy, Jamie, how was your Thursday?
Oh man, it was brutal if you were talking about the market, but I did okay. Anyway, hi Scott, hi Jamie, how are you, man?
What's up, Andy? Yep, we got what everybody had been anticipating for a very long time. It just came a little bit later than most everybody thought it would, but here it is.
Yeah, you never know. You never know when these days are going to come. They're far and few between for them, and I'm going to shed some more light on this and something I talked about in Tuesday's webinar with Steve. And I think it's going to be some really good. It's going to be some really good content today. If you're buying close to 60 years now, so I'm sorry, 50. I know I'm old, Jamie, but so anyway, let's dive in, guys. I think it's going to be a good session. All right. And hopefully most of you, if not all of you, kind of avoided getting hurt too bad today. But maybe we can share some ideas today that will prevent things like this in the future. Legal issues right now, or the not issues, I should call it. Be sharing some ideas and talking about the software and showing you some cool stuff. But nothing should be construed as investment advice. All right, if that's what you're looking for, you need to look for a registered advisor. RIA, a stockbroker, somebody who can actually legally give you that information. All right, let's talk a little bit, guys. And we always have new people in here, and lately we've been having a lot of them. Okay, so I want to be sure and let them know that we have incredible support, education, and training here at Trade Ideas. We have webinars in the same time slot, Monday through Thursday, where we encourage interaction. We're here to help you with the software. I'm going to be showing some things, some cool stuff today you can do with the software that maybe you didn't know about. And these are, like I said, Monday through Thursday. And on Wednesday, we do have our demo webinar, which is our CEO, Dan Merkin, and our CTO, Brad Williams. It's a great place to come for more Q&A. And let's not forget the Traders Room. This is free for everyone, even if you're not a subscriber to Trade Ideas. You can get in there and you can see the software in action, and you can hear Barry and a lot of great traders in there that will be calling out alerts that they've gotten for their windows on using Trade Ideas. So it's a great hangout. Regardless if you're a new trader, experience, it doesn't matter. It's a huge, probably about 500 traders, and like I said, it's a great place to be if you're a trader. All right, and let's not forget the support webinar, guys. Ask questions. Be sure to make that if you can. It's every Monday through Friday at 12 Eastern time. All right, Trade Ideas, simulated trading, guys. In conditions like this, a lot of new traders, if you haven't. If you're just new to the business and you've only, dove straight in, we do not recommend this. And in days like this, it's the reason why. I know there's plenty of people that blew up their accounts today, and it's because they don't understand, the dangers that come with trading. And, the best way to learn is come into trading room, watch over the shoulder of really good traders, and use our paper trader, our simulated trading. It's a great format. You do not have to have a broker connection. You do not have to fund an account. You just have to have a standard subscription to Trade Ideas, and you can use our paper trader. And it's probably the best interface I ever used. I trade live on it every day. It's really cool. And any new trader should, in these conditions, really, especially, spend several months paper trading. That's how you're going to basically learn. Eventually you're going to have to dive in with real money. There comes another level of emotions when you do that, of course, but at least you'll have, the technicals down, some basic strategies and things that you can, put to use when you do dive in with real money. All right. Agenda for today. And like I said, I think it's going to be a very helpful webinar. We're going to talk about the market recap. Jamie will take it over and talk about the Holly recap. There was one really nice move I'm sure he'll hit on. I don't think it followed through in this market, but it was still a really nice 15-minute move that could have done really well on. And then I'm going to talk about, something that I brought up Tuesday in Steve's webinar. And when you have these extreme overbought conditions and the market continues to go higher, but the VIX is no longer going lower, guys, you only see this about once or twice a year. And I'm going to talk about this because I think it's very important. And not only can it help you to get out of winning trades maybe a little early, it can save you a lot of anguish and pain. So anyway, we'll save that for that segment. And then I'm going to talk about today's price action. I know when I first started trading, and I probably did this for several years, I was days like today's, you're always looking for a bounce. Like, gosh, where are the buyers? They're always stepping in and buying this market. And sometimes you don't have those days, and so I'm going to give you maybe some guidelines for you to use when it's not good to look for bounces. And I think it'll help you if you're a day trader, even if you're swing trading or an investor. Some days it's just not good for buying. Today was one of those days, and I'm going to give you, my 2 cents of why it's not, and why you can kind of see it coming. All right, let's prepare for some opportunity. Now that we've gotten all this out of the way, ugly down day, maybe there'll be some follow through in the next few days. We want to be ready for some opportunity. So we're going to build an alert window together to look for this opportunity for strong stocks that are pulling back to levels of interest. All right, so let me back out of this real quick, and we'll pull up the SPYs and we'll take a look at the market here. Zoom in here, kind of a warning, and look at it's below the moving average. Remember how I spoke, I think maybe in one of the webinars, how we've been kind of holding, been staying above. I think Steve was talking about this too, how we a very tomorrow you can see over here, once we got open, we kind of came back and tested it like 3 times, once there, and then once there. And we held and we moved higher. Well, that's all pretty much. If I can draw it, and like I said, I do not. A key, not only that, you get a kind of a double whammy. Being the that we have going, could have what's called a narrow range going on. A lot of times it's kind of a battle between the bulls and the bears, trying to figure out what to do, and what you end up getting what you call a narrow range day. That may be like anything. I really don't, but. We'll take a look when it comes to the overall market. And I'm going, next thing you know, the Qs just followed. Average didn't quite make it to the, I'd be watching tomorrow. Kind of like, once again, I focus mostly on the spot. Jamie, ugly day. So I tell you,
was pretty much up in the trees all day.
Mm-hmm.
So,
it wasn't like capitulate volume that we had over here. You can see. So which may tell you, well,
base and coming down. Okay, you can't really be too well. Number one, can you see my screen, Andy?
I can.
Looks like one did mediocre if you stayed in it. One did okay, but and this one got stopped out, so it didn't really knock the ball out of the park. And the market is trending. What's happening most of the time? And of course, if we come back here and pull up SPY, actually 1539, which is why the AI exited the trade here. So typically, Andy, we like to look for trades where there is spread between conservative profit and moderate profit, but of course that doesn't exist here. But staying in that trade for just a little bit longer sure would have paid some huge dividends. That's we're not used to seeing that type of disparity between what you're seeing right there versus what we're seeing on the chart here. So some decent spread in there to the tune of us finishing down 5.7.
Holly, and then of course she takes them and does her magic with the back testing and all that. But they're built on using daily charts. Okay, so you have a lot of daily parameters in there, like breaking through yesterday's low, okay, or something like that, and on maybe certain parameters on the daily chart. So if it's gapping way down, stuff that goes in it, and gaps, big gaps like this, we've known. It can be difficult for Holly, but she did, pretty good day thanks to a couple of trades there.
Yeah, and regarding Joshua's question there, why can't the AI, when hitting, hitting an example, just use what was that, a trailing stop? Give me a second here. I got it. Let's see. When hitting, for example, 10%, put a trailing stop of 3 to 5% based on risk and just stay in the trade? Well, that's a good question, Joshua. And trailing stops, I don't know.
It's
It's
kind of
kind
well,
of,
that's kind of what profit save is.
yes, yes, and of course that's what we talk about all the time: profit save and reduce risk. It's just a different. It's kind of like a modified trailing stop, which in today's market environment, it's kind of like convergence to the mean type trades, Andy. They look really good and really sexy in retrospect when you're going through charts, but interacting with them in real time a lot on these trailing stops, they just don't pan out a lot of the times, especially on the intraday time frames like we hope they would. Of course, WAFU is an example there because it took an extreme rip up, but a lot of the times they're not taking these extreme rips up. So
Right.
that's why we constantly, like to put it out there that, hey, it's not just the original entry signal. A lot of the times when the AI exits, it could also be a good entry signal when we're in, quote unquote, a more normalized market. And today was definitely not a normalized market. And I want to address Dana's question right now.
Sure.
The AI strategies window at the bottom that shows a loss of 199 that doesn't show a gain on the day. Good question, and I will show you exactly why that is the case. Because the numbers, and I've just got my desktop
Well,
made a
you're on
mess today.
moderate too versus conservative.
Right. So keep in mind, let me just fire my pen back up here. These numbers that you're seeing over here, positive, down $1, and then up $103 on 5 trades. These numbers right here are reflective of 100 shares per trade. So if you were making 100 shares per trade, making trades of 100 shares, these are the totals minus commission and slippage, obviously. Now, what you see down here, moderate profit, is based on my settings that I have under tools and options when we go over here to the AI trade sizing. Because see, I don't have mine on 100 shares per trade because we can dictate, okay, 100 shares, 1,000 shares, whatever floats your boat. We could also use dollars per trade, but I'm using this. I'm like, okay, I don't care what the stock is. I want to risk $100 on each trade, and then the system will figure out how many shares you would need to be in case you got stopped out to lose right at 100, of course, not including slippage and commission. So that's why these numbers down here are different than here, because if we were using $100 risk per trade and moderate profit, you're down about $200, and once again, that does not include slippage or commission. If I cycle through this drop down, if you were just holding everything blindly until the close with no stop losses or anything on $100 risk, I would have lost close to $600 in aggressive mode, and flipping back around to conservative would have been down $38.10 because I was risking $100 per trade. And you can see here the share amounts. I'm in a lot more than 100 shares per trade on most of these trades. 1,200 shares on the FNGD, on the WAFU, only 43 shares, right? 345 shares. So that's why you're seeing different numbers down here as opposed to up here. And Andy and I keep harping on the developers. Hopefully in the not too distant future, these numbers will reflect our risk mode here with the parameters that we've built in. But we'll keep hoping for that, and hopefully it gets done pretty soon. So hopefully that explains why these numbers here are different than what you're seeing up here. All right, so a couple of more there. So any other AI things we need to talk about before I kick it back over?
I sent somebody a video, and yes, setting up Holly is in there and in that playlist. And see, you change settings from the AI to moderate. It'll be in those videos I just dropped in there. If you want to take a look at those videos, it's a complete playlist of how to set up Holly, and that's for Brokerage Plus. But when you're setting it up in the paper trader, it's the same. It's pretty much the same setup.
That is one of the risks involved. You run into a thinly traded stock, and typically if it's a large spread, unless you're using market orders, there's a chance you won't even get the fill in that stock. If you're running market orders, yes, but then you run the risk of eating a big spread there, and sometimes that can lead to an immediate stop out. Okay, so you know, once again, the difference between simulation and real world execution, there's a lot of things that come into factor there that we can't necessarily see on these screens when the AI is just simply marking prices at which the alerts occurred. Okay, one more question here for Daniel, and then I'll kick it back over here to you, Andy. How does the product calculate positions with risk? Tight stop, large position. Well, Daniel, if you're referring back to my sizing here, if I go back to tools and options, $100 based on risk, okay? So it's gonna calculate, okay, the stop losses are always present, so it automatically calculates the share amount that you can be in, so that if that stop does get hit, you only lose right about that amount that you're wanting to lose. Of course, once again, minus commissions and slippage there. All right, Andy, let me kick it back over to you. I don't want to hog the mic here because you got good stuff. There we go.
All right. Let me get rid of this, show my screen. All right. I wanted to talk about this phenomenon that, like I said, it may only happen once, twice a year. I think it's maybe happened a couple of times this year, and it's what it is the VIX. Now I don't have a futures account, so I'm just going to show you the VXX, which is kind of it's an ETF that somewhat tracks the VIX, but it is toxic and can be very dangerous. Although if you hit it in a timely fashion, you can definitely make some decent money with it. And what I mentioned in the webinar on Tuesday is, guys, I'm seeing this happen again, and you don't see it very often. And this is down here. You can see these days right here. This starts on the 5th, okay, June 5th. Okay, we gapped down. The market kept going higher, and this thing just kind of quit going lower. And I noticed that. The following day, the market went higher again, and this actually was going higher with the market. Okay, first you have to understand what the VIX measures. Okay, the VIX measures the amount of put buying going on in the marketplace. So what does that tell you? It tells you that people are getting nervous. People are big money or anybody who's sitting on profits that like to what's called hedge. They're buying protection. Okay, obviously the market's still going up, so you still have more buyers than sellers, but longs are getting a little nervous and they're buying protection. Okay, in other words, they're getting a little antsy, a little nervous. Had a huge run in the marketplace. Gosh, since lows, SPY's probably up near 30%. Just crazy. Let's pull up the SPYs real quick and the Qs. I'm gonna pull both of them up, and you can see here. All right, this is the 5th. This is that day where the market gapped up and kept going higher, and the VIX did gap down, but not that much, and it just kind of went sideways as the market went higher. And then the next day, here's the spiders again. All right, real quick, the Qs on these days. That'd help if I put the right amount of Qs in there. All right, there is the 5th, and there is the 6th. You can see both days, market's still going higher, and yet the VIX was going higher with the market. Okay, so you had some definitely something going on. You had people that are getting nervous, okay, which means they're probably got a trigger fingers on the sell button. They're buying puts, and when you see this, guys, you got to be prepared, and you got to, and this is why I always keep an eye on the VIX, on this VXX, because like I said, this may only happen once or twice a year, but when it does, you can really benefit from it, either by going short if you're a short seller at the right time, or maybe you're long, you see this going on, you're like, okay, time for me to start doing some selling, where you're selling into this move higher that we talked about in the spiders, because you see what's going on in the VIX instead of having to sell on this day, the huge gap down day. Now, I'm not saying this is always going to happen when you see the VIX kind of not doing what it's supposed to as the market goes higher, if you will. But in more times than not, I've seen the market sell off, and it's usually a pretty good sell off when you start seeing that. What's the word I'm looking for? Disassociation. I keep trying to think of this word, and I can't think of it.
Bifurcation.
Where they're not connected anymore.
coupled.
Yeah, decoupled. There you go. They decouple.
Decoupled,
That's it.
yeah.
They decouple. Yeah, they decouple. Uh, decooking. Bob said. Divergence. There you go, Debbie. All right. So anyway, guys, keep an eye on that. I always like to have it up because you can, you know, it's why yesterday I got out of my longs and I actually bought QID. And, you know, and got a nice little, you know, move today from it. Sold half and still in it. But anyway, that's it. I want to. That's all I want to talk about now. I want to talk about the SPYs, and we're going to talk about the intraday and what I know a lot of traders will do because they're so used to do it. Buy the dip, buy the dip. Well, through my experience, and I have a lot of experience in day trading over the years, and so does Jamie. Okay, and what I've noticed is most of the time when you get a bounce in the market, okay, it comes in the first 2, maybe 3 hours of the day. Very seldom do you see a market sell off this hard with this kind of volume and you're halfway through the day and there hasn't been any bounce at all. Okay, that tells you right there, you know, when you get this late in the morning and you're not seeing a bounce. I'm not going to say it can't ever happen, but in most cases you just get what's called continued selling. And I know it's tempting. I see charts out there. You know, I see Cisco today down almost 7.5%. You know, and it's just breaking through. Look at that, almost broke through 4 moving averages today. And that is just ugly. And it's so tempting to take nibbles at these things when they come, you know, close to these levels. But you just get this continued selling over and over. And same thing can be applied to stocks. You know, after a certain amount of time, you know, I was tempted today in Agilent, and luckily I didn't pull the trigger because it would come down this morning. I was watching the market, and this is in my paper trading account. You see where I got in and got out real quick. The buy sold pretty much a flat there because I could see it just wasn't happening today. But I didn't buy it in our real account, but I gave a shot there in the paper trader. But this is the kind of stuff, guys, when you see, once again, when you see this kind of price action and it gets like halfway through the day, you're better off just sitting back and waiting for your pitch. Okay, you don't have to play hero in this kind of price action. Not to say that you can't get bounces, but look at this. Below, it's 10-period moving average all day long. Even if you were looking to play a bounce, I didn't see any reason to even, you know, that's your momentum line right there. And we just stayed below it and really didn't even touch it to the very close and closed down and finished on lows. So I just want to throw that piece of information for you day traders out there or any swing traders. Okay, when you see this kind of action, I was real proud in our account today. Nobody took another, you know, long. We were hedged, and we actually did. We didn't make money, but we did very well considering what the market did, because we were hedged and nobody took any new positions. Nobody got foolish and started jumping in longs trying to play bounces, because we recognize this is serious selling. And I know from experience my early days, and I know how traders think, there were people trying to buy this bounce all day long, and it can be very painful. And so I just wanted to throw that out. Now, with that said, what we want to do, okay, is we want to look for some opportunity in the marketplace. All right, so what we're going to do here, we're going to pull up our composite rating. Okay, and what this is just a indicator that it's a custom formula that you have access to. We made it part of it. It's not a custom anymore. You have this filter in there, and you can it's based on what's called score. And what this filter does, okay, it has about, I think 11 technical filters in it, metrics, and about 4 or 5 fundamental metrics in that, okay, and it kind of rates the stock. It kind of gives them a score based upon their strength, both technically and fundamentally. And as you can see here, Zoom is at the very top. It's got a rating of 99, okay, so very, very strong chart there. Held up today, as a matter of fact, was up almost a 1.5%. very strong. And you're going to see as you go down there, these charts are very, very strong. Okay, but you have to have a composite rating greater than 90 to be in this chart. And you can see we don't have that many today. But what I want to do is I want to go back to yesterday, and we're going to build a watch list. Okay, and then we're going to track this watch list to look for areas, or the software is going to track it for us to look for areas of interest where we might want to pick up some of these strong stocks. Okay, maybe we get a sell-off over the next 2 or 3 days. We're going to be in a position where we're going to see stocks that were really strong up near all-time highs that have pulled back to a level that we want, that we're interested in. So the way I'm going to do this, I'm going to go back to yesterday's close in my time frame here. I'm going to use an historical date, and I'm on Central Time, so I'm just going to go to 3 p.m. and I'm going to put it on Wednesday. So I'm going to get all the stocks that were on this rating yesterday. Now you're going to see a lot of them really are starting to pull back today. Look at that. So what we want to do is we want to build an alert and track these stocks. Okay. Find strong stocks that are pulling back to an area that we might want to buy them. All right, so what we're going to do here is we're going to stretch this out. We're going to copy this, all these symbols. If I can get them all, I don't know if I can get them all in one here. Let me see if I can put them for me. Yeah, I did. Okay. All right, so we're going to copy them and we're going to put them in a symbol list. Don't want to do that. So what we're going to do is go to Tools, and we're going to go to Symbol List. And we're going to create a new list. I already created this. It's called Score. I started to build it. I mean, I didn't build it, but I put it in there so it save us a little bit of time. But you could just put Create New List and put Score greater than 90. That's going to be the name of our list. And then we're going to edit this list, and we're going to paste all these symbols in there. So now we just dropped all these symbols, and you can do this. This is nothing I can share, guys. You got to do it along with me if you got the software. Okay. So what I did is just took this composite rating. Okay. I'll tell you what I'll do. I'll drop the list down into the chat window in case you guys don't have this. There you go. So if you want to copy those from the chat window, you can do the same thing. Hopefully I got them all in there. Yeah, it looks like I did. All right. All right, so we did that. Now let's click OK. So now we built that symbol list, and it has 50 stocks in it. Now remember, these were the 50th strongest stocks in the market yesterday, and we're looking at them technically and fundamentally. All right. So what we're going to do now is we're going to create an alert, and we're going to put this symbol list in there so we can look for opportunity. Okay. So let's go to New, and we're going to build a new alert. All right, and we're going to start from scratch. Let me get this out of the way. And what I want to see is I'm thinking this may be, maybe a pretty good drawdown, in these stocks. So what I'm going to do is I'm going to go to search, and I'm going to look for stocks that are crossing their 50-day moving average. Now, to be crossing, all they basically have to be doing is touching it. If they hit the 50-day moving average, you're going to get a symbol. So let's just type in 50 SMA, and there we go. Let me do crossing 50. I know we have some of them. It's probably not naming it right. Let me just type in 50. There we go. Crossed above or crossed below the 50-day moving average. Well, I'll tell you what we're going to do. We're going to put both of them in there just in case we miss the alert where they cross down. Okay, we can catch them when they come back up. So we're going to put both of these in there. We're going to add alert, and we're going to check it. And we're going to go back to search. Actually, I got them all in there, so I don't even have to do it, but I'm going to do it just in case. So we're going to go to crossed above as well. And we're going to do it. And then what you would do is go to 200. And we'll add both of these as well. Crossed above just in case we miss it. And cross below. So if these stocks come down and cross either one of these 50 or the 200-day moving average, you know, we don't have one for the 20, but honestly, I think 20 may be a little bit too early. I want to catch some of these strong stocks who really, you know, pulled back, and some of them are not going to be this far away. So I'm looking for these stocks that are pulling back maybe to their 50-day moving average. And we could also, you know, if you wanted to, you could add some other stuff in there, but I'm just going to keep this basic and simple, okay? Because who knows, you know, these stocks, we may get a gift. Some of them get hit over the next couple of days and get slammed down there, and we can pick these up on the cheap. All right, so filters, since we're using a symbol list, we don't need to put any filters in here. We know what our parameters are. We want it to search any stock in our symbol list. So we don't need any filters, okay, just alerts. So we're gonna go to add existing lists and see if I can find my one I just made. Gosh, I got too many in here. Let's see. Let me know if you see it. I don't know why they don't put these on the top when you make them, or maybe they did and I just missed it. There it is, score greater than 90. And there's our score greater than 90. So now we're only following this list, only stocks where the score from that symbol list was greater than 90 on that day. All right, so we click OK, OK, and look at there, we already actually had one go off today, and that was Intel. Okay, let's just go ahead and do a quick, let's add some columns here to make it, I don't want these basic columns, default columns. You take out description, and let's take out, let's put relative volume. We want to see how much volume has been coming in since it sold off. Got price, volume today, maybe a volume in the 5 minute, maybe check to see how much volume is coming in as it's hitting this 50-day or 200-day moving average. And change from the close. We want to know how much it's down on the day. All right, that's some good columns right there. Let's put change from the close over here. Let's put all right. Let's see if anything came today. Now today, something like today, probably a little bit too early for me, but let's pull up Intel and see if it really did. And there you have it. It ran right into its 50-day moving average today. So what may happen? Maybe we get lucky. And for the next couple of days, Intel comes all the way down to this 200-day. If you have this up, you will be alerted for it. Let's see if anything else came through today, getting hit hard. Look at that's Intel bouncing up and down. So of all those major stocks, those 50 stocks we just put in there, Intel was the only one that crashed through its 50-day moving average today. Tried to hang on. You can see it went back and forth 3 times. That's okay. I kind of like seeing this. Okay, if I miss it, maybe when it comes back through, you can take another look at it. So I think, guys, this can really be helpful to you. All right, I'm going to go through and just maybe take a look at some of these to see if they're any close. Maybe these ones that are down here on the downside. Oh gosh, look at that thing. TW, there's one that might get there. There's another one that may get there over the next few days. If we continue to see the downdraft, Microsoft could very well do it. I mean, you're looking at these things now and you're thinking, gosh, these things, some of them are really long ways away, and you're right, and they may not get there. That's okay. But, I'd rather not get it than get it too early. So a lot of these are probably a long ways away, but if we do get some, like I said, guys, if this is a start of something, which it might be, and we get to sell off these things, we all know they can get hit pretty fast. So there's DRD. There's that Intel we just looked at. Tesla, that thing's gonna never come down to the 50. All right, so guys, I'm gonna share this. Let me name it first. I'm gonna give it a name, and we'll just call this strong stocks crossing key SMA. Okay. And what I'll do is I'll share this with everybody. But remember, you're going to have to take that symbol list that I dropped in for it, and you're going to have to make your own symbol list. I can't do that for you in the back end. So, I mean, by saving this. And, you know, it's okay if nothing happens tomorrow. You know, maybe it's Monday. You know, we get a like a Black Monday or something like that. and these things start firing off. Don't be discouraged if you don't see anything coming through there quite, you know, real quick tomorrow. Okay, and I'm just going to call some strong stocks, pullback, SMA. All right, very basic alert, guys. I don't even think you have to, you know, copy this from my cloud link. You could probably build it faster than copying it anyway. Yeah, no, Joshua. Yeah, I shouldn't say Black Monday. That's scary. Honestly,
It's more like a gray Monday.
Yeah, honestly, yeah. I don't think it's the start of something big. I really just think I mean, that wasn't major panic selling today. It was strong selling. A lot of people obviously got out of stocks, but my personal opinion is we've come a very long ways in just what 2.5, 3 months, and yeah, we were due. We were way overbought, and maybe a little scare in the market from, you know, Fed, but we'll see. But and this may be a way for you to find some opportunity. And here's the thing: you don't feel like when if these stocks do come back to these key levels, you have to go all in. You know, maybe buy if the market is getting crushed, maybe you just buy a quarter of a position. Okay, and commissions are basically free now, so you don't feel like you have to go in all at once. You can nibble your way in, and then wait for the turnaround, and then maybe you can add. All right, Jamie. Well, let's see. Got some questions?
Well, we got a couple
there?
of questions here
Okay.
about the how did you get to the initial top list that created the symbol list? That's a question from William.
Yeah, well, what you can do is, I had already created that because I started to build this before, and I said, what am I doing? I want to build this in front of everybody. So all I really did is I created new lists. So all you have to do is go to symbol list and go create new list, and then you'll get a name it. And this is where you can come in and name it, you know, score or whatever you want to name it. Strong stock watch list. You can put this, and like I said, you can put this. These were like I said, they were the 50. It's the Trade Ideas 50, the Nifty 50. So you can put this symbol list in any window and look for opportunity. But say strong stocks. Let's just call it strong stocks. That's our symbol list. Okay. And when I do that, it's going to drop it down here at the bottom and say empty. Okay. Then that's when you want to highlight it, and then click on Edit List. And that's when you want to copy and paste those list of stocks in there. So I hope that makes sense. If you still don't get it, the composite rating, yeah, that's the same. That's the same one. Are you asking me how I got that, William? Did you miss the first part of that, or you got it now? Okay. Yeah. What I did is I pulled up my composite rating. Okay, and I can share this for you if you want. And let me just go over here. Let me make sure it doesn't have, because I created the custom formula for this, well, with the help of Michael. And let me make sure I don't have the configuration still set up on it with a custom stock composite rating. No, that's what everybody has. All right, so I can share this with you. So let me just do this in case you don't have it. And dropping it in there. Composite rating above 90. There you go. So then all I did, I just sold the history, okay, because I just shared the history version. Sorry about that. So then all you got to do is copy and paste. Just copy, take your cursor, all right, and just go all the way down to the bottom, Control C, and then you want to just drop it in this edit list, and then you just want to paste it in there. I think you have to use Control C though. I don't think you can copy paste. No, you can't. You got to use Control C on the when you're copying. All right. Yes, Bob, you have to Control C. Yeah. Right click and copy doesn't work. And by the way, you can always take this and put them in a spreadsheet. Okay, you just do the same thing, and you can right click and save content. All right, and then you can put them in Excel files if you want to do it that way as well, to do your own little homework and things like that. So a lot of stuff you can do with this. Again, I dropped the cloud link, Harry, into the chat window of your GoToWebinar interface. All right. And then what I did is I did a history. I did historical day because I wanted to get the stocks that were strong yesterday after the market had a nice run. All right. I wanted to get the strongest stocks out there technically. So I went back and did a history to yesterday, and you have access to that cloud link in there. So if you just click on that cloud link, okay, you think you got it now. All right, so then all you got to do is just copy and, go down the list and copy all these and do what I just showed you to do, Control C, and then create a symbol list. Yeah, and that can be a great watch list because those are basically the 50 strongest stocks out there technically, and fundamentally, is according to our metrics, which honestly I love them because they're real-time metrics. In other words, when a stock gets hit in a market like this, they react immediately in real time, which is none of the other competition out there can say that. Can you narrow down the price of the stocks that it selects on that list? Yeah, you could. Let me see what I did with that. What did I do with my composite rating? There it is. So what you could do is sort by price, okay? And then you can just only go and get the bottom ones, if you like a certain price range. You're not gonna find, obviously, too many $5, $10 stocks on this, okay? Most of the ones that are really, really strong, that have good fundamentals, okay? I know you get some of these high flyers that have great 3 or 4 or 5 day moves, but a lot of those probably don't meet our fundamental metrics, so they're probably not going to be in there. All right, we only got a few minutes, guys. Great questions today, and let's see, just making sure I got everything. Looks like I do. I'm going to go ahead and bring Scott in. Thank you guys for your participation, and I'll bring Scott in, and he can walk us through the remaining of our webinar here. And hang on, he will have a discount code.
Yeah, thanks, Andy. Thanks, Jamie. On the way out, a couple reminders. We do have those daily support sessions every day at 12ideas.com/live. Feel free to show up and ask questions, see what's going on. We got an ebook, about earnings season, how to use earnings season to your advantage. Trade-ideas.com/earnings, a place to go to get it. It's been very well received. People like it. And it's got some strategies embedded in it that you can add. They're cloud links you can add to your layouts and check them out for yourself. Podcast should have a new episode up soon, and we've got some good ones out already this year, some good interviews. So you can find it by searching for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription, download some of the previous episodes, and enjoy. There's a code, Holly June, good all month long. Saves 15% off your first month or year of Trade Ideas or a new subscription, so check it out, or an upgrade, so try it. You can follow Jamie on Twitter at QuantBot. You can check out Steve on Twitter at TodayTrader. We also have @TradeIdeas, and Facebook.com/TradeIdeasPro is the Facebook page to like and share everything we post with all your friends. And if you have any questions, email us info@trade-ideas.com. Goes into our help desk software for the fastest and most helpful reply. Thanks, everyone. Thanks, Jamie. Thank you, Andy. Have a good one.
Thanks, everybody. See you tomorrow.